able to keep that going for very many years, but that's primarily because of what we talked about in step one. You run into this focus problem. You know, you work one strategy, you get really good at it, but then the market changes, takes that strategy away. If you want to have this, you know, long-lasting performance where you're, you know, 50% plus or minus a couple of points year after year after year, and you're shifting from one to the other, you want to manage other people's money, and you want to perform, you know, better than 20% a year, so that, you know, you can get good performance fees and so forth. You know, all of that requires that you be adaptable in your strategies. So, so it's really a big deal. It's like if you spent 15 years getting good at trading, but you were able to get a certain amount of money together and you were able to raise other people's money and trade other people's money, you could earn enough in just 3 years to retire on. I mean, that's kind of the thing about trading. It's that kind of a career where you don't have to do it forever. You don't have to do it for 30 years in order to build up retirement savings. You can be done in a short period of time, and then after that, trade if you like or not, you know? So, so it's worth it to put in the time. If it's a few months, it's nothing. Put in a few years, it's still worth it, because in the end, when you achieve that level of payback, then it's worth all your time. But then last of all is to track your results in a spreadsheet and then evaluate. Your minimum level of success that you're after is 30%. And then your goal, of course, is to get over 50%. That's what you're trying to accomplish. So let's look at how you would do that. This is a spreadsheet which I have and I'm going to be making available to subscribers. It's a tracking spreadsheet. It's very simple. Actually, we'll have a more robust version of it. But this is very simple. And basically what you do is you go back to one of your environments, you know, where you're doing TradingView or your broker's demo account. And then you trade and you look at, you know, you just record, here's my entry price, here's my stop price. And you do this for each trade at the beginning of the trade. Now this will calculate the risk per share, and if the entry price, if the stop price is below the entry price, this will automatically say, oh, you're long. So these two columns just calculate for you. And then you follow what your actual trade exit is. So all you have to do is enter this number, and this number. And the spreadsheet will take care of the rest. So that's just as lazy as I can make it, just as you know, short a piece of work. And then you go through, you're looking at charts, you're saying, I'm in here, my stop's there, and I'm out there. And then repeat process. And then you come all the way down after 30 of these trades, you know, then it's tracking your trade result in terms of money. It's going to total up whatever money you've got there. And then your risk to reward ratio. This is the most important column. This is what you're after. Your goal here is an expectancy of 0.3 or higher, or in other words, 30%. If you manage 30 trades on a given system, and you find that you're able to get better than 0.3 on it, better than 30% return estimated on 100 trades. That's what this is. This expectancy is, here's how you'll come out if you risk 1% per trade on 100 trades in your system. This doesn't have any of the position sizing in this particular example. This just assumes that that you've done that work, that it's all equal, and that, you know, you're working with like 100 share positions or something like that. But whatever it is, you've equalized the risk on each of those. So you really need a spreadsheet that allows you to dictate position size, and that's why the more robust form of this will be available to the subscribers. But so then this risk reward ratio, if you just average all of these after a certain number of trades, you got to have 30 to make this worthwhile, at least 30. Then that's what you're trying to come up with, is 0.3. Your goal is actually 0.5. You want to be better than 50%. I had a great time when I coached students years ago working through this. I would put them through 30 trades, and then then we'd evaluate, and we'd come back and say, now we change this and go back to another round of that. And then we would go through. I could always tell who was going to likely end up being a great trader, because they actually pushed themselves through 4 iterations of this. I mean, it takes time. It's work. But if you if you go through 4 iterations of 30 trades each, and you're learning and you're improving and you're finding the methods that work for you, after 4 iterations, you're like, okay, I really know this system now. I know what to expect out of it, and I can go forward and actually trade it. And then you do the same thing with another strategy. And you find your 3 strategies that are going to really work for you, or more, however many you're working with. And if you do all that, I know it sounds like a lot of work, but when you're working with like chartgame.com, it's actually kind of fun. And if you're just using this spreadsheet or something like it, you can even write this on paper so that that part of it's really quick. Then that gets really fun, because then you're able to say, okay, I did that 30 trades, and look what my outcome is. It comes up negative, you're like, ugh, how can this work? Well, first off, maybe it's a terrible system and doesn't work. Or maybe it just doesn't work for you, your own particular beliefs. And so you keep looking. No need to go through another iteration of something that doesn't work and comes up negative for you. And there is also the case that you could have just got unlucky that time around. If you really like it and you think, well, I'm just going to try it again. A second iteration of 30 trades and you still come up negative, ditch it. It's not for you, right? Or it doesn't work. Anyway, that's how you do it. That's your tracking and evaluation. That's what you're looking for. So for phase 2, then you're really in this test and try, or try out, test, and evaluate mode. And that's the mechanism you're doing. So let me just take a quick second to show you a couple of tools. We'll look at Trading View first. We can go ahead and bring that up.
Yeah, we sure can. Supposedly. There we go. All right. Let's go to tradingview.com.
All right. Now, if you want to, Wes, if you don't mind, just sort of showing people where the PineScript thing is, and do you have to have an account, or can you get that just as a free?
I think you have to have an account in order to save. But
the free account will do it, right? I mean,
yeah. The free account will do all of that.
So you have to sign up for TradingView and get an account, but go ahead and show them where that is.
All right. So the Pine editor is down here at the bottom. It just says Open PineScript Editor. You just click on it, and it brings up the PineScript Editor. And the PineScript Editor allows you to write programs, but in TradingView, they're actually pretty simple. It's a lot simpler than MQL4 or in Metastock or with pretty much anything else, because PineScript is it's a very simple script. If we go over to the Help section and open up a new window with the PineScript reference, you actually find everything inside the PineScript reference area that you would want. So all the various currencies, the various aspects of the market that you want to find, like the day of week, the let's see, the histogram would be for indicator type stuff. Then you have you have HLC3, which is high, low, close divided by 3. That's a pivot, or typical price is what they call that. And I mean, but it just, everything that you want is right here inside of PineScript. Now, with MetaTrader 4 in MQL4, in order to get this HLC3, you actually have to do all of that yourself.
Yeah, or find somebody who has already done that work out in the OpenScript world, right?
Yeah, it's just, it's much simpler in PineScript to do most of these things. So, anyways, that's PineScript, and that's why it's so much simpler.
Okay, now if somebody wanted to just copy and paste like an existing system, let's just show them that much real quick.
Yeah, so in order to start a PineScript, like this is the very, very basic stuff right here. We want to start with a little bit more than that. So if we go to New, Blank Strategy Script, then it actually gives us a basic strategy right here. Long condition is crossed over the simple moving average set to 14 and a simple moving average set to 28. If it crosses over, that is a long trade. So if long condition equals true, then you enter a trade, a long trade, which is buy. Or if the opposite is true, then it will put in short condition, cross under. See, this is also another really cool thing about PineScript, whereas looking at MQL4, in order to do a crossover or a cross under strategy, you have to actually program each of the moving averages, and then you have to do a series of if-then statements. Whereas this is just long condition equals crossover.
They've already done it for you.
Yeah, short condition equals cross under. If short condition, then you want to place a short trade.
Yeah.
That's it. That's PineScript. Like that's why it's so simple to use. And in the PineScript, let me just show you really quickly in this PineScript area for some of the things that you want to use. Let's say you want to try the plot function. Plotting will allow you to create an indicator. I want to show them the plot stuff because
Sure.
If we go down to plot under the built-in functions, we go to plot. It actually gives you all of the things that you can do with that plot. Huh. So there's a series, which would be your close price or whatever the price is that you
explains each one of those down there.
Yeah.
So yeah.
And then you've got the title, color, line width, style, track price. I mean, just all this cool stuff. And then if you go down, you can even plot arrows, bars, candles, characters, shapes, and point figures, which isn't a plot function, but you can you can plot a point figure. This is just a sample of some of the stuff that you can do with PineScript. We're not trying to sell you on TradingView or anything, but just that PineScript is
it's pretty easy, and you can really get a lot of power going.
Yeah.
So then, if they were to, let's see, is this a full-on strategy you can just actually test there?
Dude,
whoops!
You always touch that screen.
I accidentally touched it.
Yeah. Okay. This is a full-on strategy. Yeah, we can actually test this strategy. It will work.
That. Show them how that works.
All right. Let's. We want to add this to chart, and that's how when you add a strategy to the chart, it actually runs the back test automatically. So I'm going to add it to chart.
That is the back test, right?
Yeah. So it ran the back test starting. Wow. So run a daily chart. It's went all the way back to 1968.
Because they have the data to Disney. That's fun.
Yeah, that is pretty fun. So, anyways,
See, just like that, boom.
Yeah.
There's your back test.
And if we go to performance summary, you can see a summary of all the results. And if you go to overview, it tells you, whoa, look at that. That's pretty terrible. So a moving average crossover strategy with using.
All right, hold on. Go back.
Sorry.
There. Let's just show them what we're looking at. Why it's so terrible. First off, the graphic is what you want is you want to see the blue up, and you want to see the blue up above the dashed line. And then there's this huge period of time here in this particular strategy on Disney where it's below the line, and that's no fun. And then this is the drawdown. This is from whatever peak, and the lower and lower that gets, the less and less you're interested. But here, notice the stats. We got 2.02% net profit on.
Here, let me zoom in on this so that way everyone can see it a little bit better.
Okay.
Oh, too far, way too far. There we go.
All right, and maybe hide that. Yeah. Oh, that's not going to repaint. That's funny.
That figures.
Okay, so 479 total trades, less than 40%, just 39% of the trades were profitable. Profit factor is only 1.07, and the maximum drawdown is $43. I can't remember what the starting amount on this is. $20. It's like $1,000. That's what it is. So it starts with $1,000 in the strategy, and so we've got 1987 is all the profit we've made since 1968. So you can see this is, but this is interesting information. 27 average number of bars in the trade. It takes you 27 days to go through the average trade size, and so that's really interesting kinds of data. That after 400 trades, you can know that your average is 27. That's the kind of stuff that's useful here. I mean, not everything here is exactly perfect, and you got to play with this quite a bit to get a sense of what's more reliable than others. But that particular kind of information is straightforward and simple. It helps you have appropriate expectations for what you're doing. So that's one of the reasons I actually like goofing around in TradingView for this kind of testing activity. Now let's have a look though at ChartGame.
ChartGame. All right. Yeah. Let's do it.
You can bring up chartgame.com. This is actually kind of fun, but you got to be careful not to try to actually win the game. Very important that you don't pay any attention to that. All right. So the nice thing here is, it says no sign up is necessary, but yet then they make you do this. So
right. I'll just sign with Facebook.
Okay. pick a username. Well, this is good. You know, we're going to walk you through how to get started on Trader Continuum. Yes, very good.
I can't even see if I spelled that right. Looks good to me though.
Excellent. Okay.
All right.
Great. You've earned a new badge. Ignore. All right. Move on and go right to play Swing Trader Simulation. Swing Trader means you know, days. Each bar is a day. Day Trader Simulation means it's intraday. Okay. Go up here to the gear thing. Click on Advanced Mode. Yeah, you want to do that. This will allow you to go short. None of the other stuff really matters. Oh, sound, you want to try that on or off. But basically, the idea is you want to try to, there's a limited number of indicators that you can add. Go ahead and click Indicators. And you know, you can only work with so many. Scroll down to get an idea. Simple, exponential, Bollinger Bands, ATR, and so forth, right? Let's go to CCI. Just put CCI and put in 18 period, just because, yeah, okay. And so then let's imagine that we have a strategy where we're going to buy the CCI only if and only if it has hit the bottom line from below and is on its way up. So we've got a deep dip buying system, right? So go ahead and just say next bar, because we're way high on the CCI. Just keep hitting next bar until we get down and come around. So we're interested in trying to follow this. Here we go. We're coming up, and get ready. 1, 2, 3, and stop. Now, we're going to buy the open of the next day. So go to buy.
Right.
And market, and then price is just, you know, so the number of shares it puts on is 6, you know, is the maximum amount. So click on that and go with 50% of cash. Just do 50% of cash all the time. Okay, so transmit, and here we go. Now, mentally, our stop loss, we can do it mentally or actually. Like, so here, see the stop loss at 575 is about, you know, old support. Let's actually go and put the stop loss on. And when we're in advanced mode, you can do this. Go action, you know, action up at the top, yeah, sell, and then type stop, and put in 574. Okay, now transmit, and wow, you got stopped out. Boom, just like that. Or no, we're actually not stopped out yet, but we are losing 2,500. Now we're stopped out. Great. Then we move on to the next trade, and we actually, sorry. Now we would go to our spreadsheet, and it's even better if you do it before the trade ends, but it doesn't really matter. We got in at 575 or at 609, and our stop price was 675. We don't really care about, you know, the fact that it tells us it lost $2,800. We're just looking. We're assuming we did all the allocation right. It doesn't really matter here. We want to know what did we win the trade or lose the trade. And if we did win the trade, we're going to keep track of the price that we got out on, right? Let's do one more. Go next bar, because we're dipping down again, and here we go. So then do a buy at that price of 580, 50% of cash, transmit. Oh, now go ahead and put in your stop. Oh no, you got to do sell stop. There we go. And let's make the stop 550.
Touch it again.
Oh, I did.
I gotta turn off the
touch screen.
Touch screen part of this. That way you can just touch it all you want.
Didn't mean to. Just pointing.
Yeah.
Oh, okay. All right. So go ahead. Keep hitting next bar, and hopefully this be this tremendously big winner, and we'll decide where we want to get out. And there. Okay. So now we could move the stop loss up to yeah. So hit cancel, and now change sell stop. So we've moved the stop up from 550 to, let's call it 580. Didn't we get in at 580?
We got in.
Yeah, cost basis 580.
Yeah.
So move the stop to break even, right? And then transmit that, and then just keep hitting next bar, and we'll hope we get lots more. We do. If we break a new high from way back there, then we're going to raise the stop again. So keep going. There. Okay, terrific. Let's move our stop up right underneath that gap. Let's capture that much. We'll call it 610, 612. What do you think? What is that?
6.
Yeah, underneath the gap. We want to be underneath the gap.
Underneath the gap, yeah. So it'd be 6. Does it even? I can't even see the price on that thing.
Well, actually, if you roll over that day before the gap, it'll tell you up here, and 616 is the high.
Yeah,
so let's go 615, just below the high. Oh, did you actually sell it? Oh no, you canceled. That's right. 615, and then this is typical trailing stop methodology, right? You just let this thing run as far as it will. Okay. Let's move our stop right up there to 625, right under it, because we've got a great trade going. We don't want to give any of this back if we don't have to. Well, we're out of time. We'll just sell it at market and close it out. That's what we'll do. So there's sell market, transmit, boom, winner, chicken dinner, right? So realized profit is 3.2. That's the net between the two trades. Anyway, that really doesn't matter. What you'd do is you'd say, okay, we got out at 650. And so then you go record that in the spreadsheet, and you'd repeat process, 30 times. You can see that just doing this here, we just did 2 trades in the space of what, 5-6 minutes? So in about an hour you could get through all 30 trades, and it's kind of fun. It's chart game. What it does is when it gets to an end, it'll give you a new stock, and it'll tell you what that was, what S&P stock that was out of the past 20 years.
Oh, that's interesting.
Yeah. So it's actual historical data, and this is the closest. I mean, no game is a perfect simulation, but this is probably the closest thing to trading S&P 500 stocks that I've come across. So
Well,
that's
you know what else is what's fascinating to me that I didn't even know until just now is that it doesn't give you the name of the stock that you're trading.
Yeah.
Like that to me is one of the biggest benefits of this chart game thing is that you don't know what it is. Yeah. It's just price action and some basic indicators, so you're not getting overwhelmed, or you're not thinking, oh well, once we get to this point, then we know that the market's going to do this. So let me try and figure out how to get that. But this is just straight up, look, do some analysis of this. Don't worry about what it is. Just worry about the chart and the technical analysis side. Right.
So that's an example of how you could be using the chart game to go with the spreadsheet that you put together, and then you can be validating your trades. So when we say seek out, find your methodologies. Now the weakness of chart game is that you've only got a limit, right? What if we had Wes's special cool indicators and that was our trading system? And you can't put that on chart game. So that's a little bit of a limitation there, and there are ways to work around that. You can use similar ones. You can get really good at looking at the price action, but generally speaking, there's trade-offs with all these. And then last of all, of course, you can just go forward testing in a demo account where you're actually trying that out. The only problem with that is you can't do it in an afternoon, can't do it in an hour. It takes you a couple of months to get through 30 of those trades, right? But hey, as long as you're hanging out with us, that might be something you're doing anyway. All right, so that's it. That is the step part 2 presentation, how to test. And all along the way, as part of the subscription, we'll be giving you better ideas of how to quickly test, and if we can talk some of these guys, we know these guys that own these products. If we can talk some of these guys into giving our subscribers a deal on, free subscription for a month, test this or that tool, then we'll be happy to pass that along to you. I think that's the thing we'll probably be able to do coming forward, but I guess I have to say no guarantees on that. But even if we don't get that, we will give you ideas of shortcutting the time element of testing. So there it is. There's the step-by-step method, part 2. Tomorrow we'll be looking at engage, and how to actually get your money working on the system.
Are we going to go over the Disney trade?
We absolutely have to go over the Disney trade.
Yes. Yeah, that's going to be the last thing that we do on this particular broadcast, because we want to wrap it up before the hour is up. Let me bring up Trading View so we can take a look at that.
Yeah, in fact, if we have time, I would love to go through the 3 stocks I bought this morning and why. And full disclosure, I bought them. I bought them this morning. I'm in them. Disney is the first one. And we'll talk to you a little bit about why Disney is where it is. And I didn't know Disney was going to pop up like this. I'm pretty happy about it. When I started the trade, it was about halfway up the candle. But it's still well, I'll show you what I'm thinking about the trade. First, I'm going to get into my account here because I got the markings on mine. Okay, or not. Where's my marking?
Remember, you gotta switch the
layout?
the layout. Yeah.
Okay. All right, you mind give me DIS there?
Yeah.
There they are. Wonderful. Okay.
Sweet.
So I'm going to just take away. I'll leave that one. I don't need this one. There we go. Oh, actually, I wanted that gone. All right, whatever. Okay, so here we are with Disney. And the trade that I'm working on here has actually happened 4 times before. What is it? Well, it's the idea. See, you notice Disney had this long running, 2011 up until recently. Then they've kind of gone sideways. Now, it's quite possible Disney's going to get back into a winning mode again and take off. Don't know. But one of the things that's going to keep that from happening is the fact that Disney is a good dividend-paying stock. And the problem, I mean, that sounds good. Why is that bad, Gordon? Well, dividend stocks always take a hit when interest rates begin to rise. And if you notice what's going on with TNX, TNX is up to new highs. And so it's, TNX is the 10-year interest rate note. It's basically the kind of thing, the benchmark for mortgages. And whenever interest rates rise, then dividend-paying stocks, people get out of dividend-paying stocks and into higher rate bonds because they can get better returns with less risk. I should say people. It's not people. It's institutional investors because individual people, they don't think that way. They don't care.
People work at institutions.
Yeah, there's that too. There's people who work at institutions and know.
They're people too.
But Disney's on this sort of sideways thing. And notice that when it bottoms out, when it finds some kind of support, it makes these rapid rises. This one's the exception to the rule. It's not quite as rapid as the others, but it's still worth trading. Most of these, actually, each one of these blue lines, these 3, represent a 10% rise in about a 2-month period of time. That's not the fastest, best kind of performance, but Disney's sideways. If you bought Disney and sat back and just held it, you're not going to get 10% in a year. Maybe the dividends are going to help you accomplish some of that, only if you buy, but I'm talking about how to get 10% out of Disney in 2 months. Here's a double bottom. Here's another double bottom. Actually, you've got some great divergence opportunities going on there. There's another double bottom. And coming right out of the break of that double bottom, boom, 10% in 2 months. Well, guess what we just did? We just had a very clear double bottom with a slightly higher support level than all the others before. And we just broke that. It's possible that if this thing were to follow suit, it would do this. It would go up 10% in the next 2 months. Well, actually, it shot up, what is it today? Up 2% today. So I guess you only got 8%. Sorry, folks. 8% left if you get in. Or notice Disney's noisy. Even if you missed this, you could wait and it came back around, right? So you could be sitting on 104, 103 something and hope maybe that Disney trails back and gets that. I got in the 104s and I'm happy about the fact that it's in the 105s now, but I know that I'm just getting started for what my intention is. I'm interested in grabbing 10% over the next couple of months. That's what I want to see happen. I also know I got to let a lot of back and forth happen. But this is a really good time to be doing it because we don't have earnings. We just got past earnings. So earnings aren't for another 2 or 3 months. I'm going to be able to take the profits before we have to take earnings. The profits could easily come by July. We could be back up here. But there's a bigger reason why this is a great trade right now, because not only is it like these, coming up off the bottom, but this bottom is higher. There's this stealth trend that could break. And in fact, if we do get 10% higher, then we're gonna break through this level. And then we've got a little resistance there, and then we got a little resistance there. But the reality is this whole thing could just take off. Now, what would make the difference? Why would Disney take off? Okay, there's one reason, and one reason only, that would assure that Disney would take off. And that is pro football, American NFL pro football. Now, nobody knows if the NFL is going to figure it out and get people watching again. TV people don't like to talk a lot about this, but the whole Colin Kaepernick, whatever his name is, thing, the whole kneeling in front of the national anthem. I don't know if that's it, but see, that stuff doesn't play well in Middle America and Southern States America, where you got a lot of people that just, hey, it's football and it's God and country all together. That's, what else is there? Oh, beer. It's like that it's fun to go to a professional game and, root for your team and put your hand over your heart when the national anthem is sung at the beginning. People who are fans of the sport dig that part of it. So I don't know exactly how much of that is a problem for the viewership, or if there are other structural problems that have battered the NFL's revenues. But if it's the latter, if it's something fundamental with the price and the salary cap and its market forces, all that stuff's going to fix itself because it's the free market. It does. You get people who want too much money and they can't play, so they leave the league, and these hungry new guys come in at low salaries, and all of a sudden owners are making money, and so that part fixes itself. The whole political stuff, though, I don't know. I really don't know. If that's the problem, then Disney's going to face headwinds for a long time, and this may not be an interesting trade. We don't know the future. Here's the thing. Let's suppose the whole political stuff just lightens just a little bit. Somebody talks to all these players that want to take a knee and want to make, their political agendas on the NFL stage. Everybody talks to them and says, hey, it's in everybody's interest for you to just dial it down. Just back off just a little bit. And so, the causes are still out there because, there's some good in these social causes to consider various things and make our society better and more able. But, it goes all ways. I've never been a big fan of Kanye West's music, but I'm a really big fan of the fact that Kanye West is pro open-minded ideas. And it is good to hear all sides of things. It's not good to disrupt people's livelihoods with those kind of ideas. That's really not a good idea. And that's what's been happening somewhat in the NFL. Well, suppose they dial back on that just a little. And meanwhile, you get people hungry for a good football experience. And hey, this last Super Bowl, Philadelphia, Tom Brady, a lot of people hate the Patriots and Tom Brady, but that's mainly because they're kind of outsiders, and there was all that football deflation scam. So fact is, Tom Brady's an awesome player. Guy's a great player. And yet the Eagles, coming out of nowhere, came and beat him. High drama. They even beat him at their own game, and there's a backup quarterback, and it was a fun story. So people are going to remember that story. And so when the football season starts again, they're going to be like, is there more of that around? Are there more cool bandwagons I can jump on? And if the league doesn't get in the way of itself, people are going to be interested. And oh, by the way, theme parks, people are kind of into them still. That'll probably do well this summer. Oil prices and airline ticket prices might get in the way. Might not, though, because the economy is really doing good. Everybody's got jobs, and job wages are increasing. So we'll probably see theme parks do well. And then last of all, you got movies. You got the Han Solo movie coming out. You got the Avengers Infinity Wars Disney's got a couple of real hits on its hand, and their earnings are going to reflect. So I think there's a lot of woulda, coulda, shouldas that could just pop open. And when would that happen? That would happen right about the time that this stock is approaching its former highs. And if it sort of held in there and had those catalysts push it forward, this could be a 6 or 7 month trade that didn't return to just 10%, but maybe 20, 30 or more percent. Oh, by the way, plus the dividends. So as you can see, I think Disney's the kind of trade you really like because it's got all this extra upside that could do something. But even if it doesn't, it's it's 10% in between now and next earnings potentially. And what are we if we're wrong? Well, now it's so far up above its breakout. Originally, coming right out of the breakout, you probably wanted to use the stop loss. But now it's so far up, you can use this is the stop loss, at 102. So you're in at 105 and out at 102, $3 a share. And so you're going to risk $3 a share, and you could be looking at $8 to $10 a share gained. It's a nice 2-to-1, 3-to-1 setup. Nice, easy way to manage the risk and look for a good trade. So that's why I'm all over Disney. Let me give you the other two really quick, though. Do we have time for that?
We have 1 minute till 2:30.
All right. Give me a quick... I'll just show what they are. Apple, AAPL. We'll come back and talk about this one tomorrow. But Apple, we actually teased this a little bit a while ago, and we said, do you remember, Wes, when we were doing this? I'm trying to make sure I'm not dreaming. We talk about Apple last week?
Yes, we did.
Yeah. See, so we gave these lines, and we said either it breaks the top or it dips. It dipped, I bought, it's back in the range. All according to script, all right? Now, you need to know one other trade, AMTD, TD Ameritrade. I'll talk more about this tomorrow, but this is a stock that does well and is going to do well when interest rates rise. I'll explain why tomorrow, but there's not exactly a trade set up on it yet, but we'll go through that. Wow, it looks like I bought before the trade setup really came clear, but I launched into this just on the interest rate connection alone. Well, as we say, we'll explain it tomorrow and even give you perhaps a better trade setup for it. TD Ameritrade, that's the stock that will benefit from rising interest rates. And that's it for today, from what I have.
Yeah, that's it for today. We will be back tomorrow with more of, well, the same.
The step-by-step method.
Yeah, we're going to talk about the step-by-step method. We'll also be talking about more of this stuff that we've been already discussing, the trades and the stocks and stuff. And we'll also cover some Forex stuff that we didn't get a chance to cover today. And yeah, tomorrow is going to be pretty awesome as well. Tomorrow's Thursday, so that's pretty cool.
That's good. Thursday's a good day in the markets.
Yeah.
Moves.
Yeah, and Friday we're going to come back earlier in the day. So we'll give you a different schedule for Fridays. Fridays will be earlier in the day because, I don't know, right before the market closes. No one really wants to do anything market related right before it closes. So we'll be talking more throughout the week, but on Friday we'll be a little bit earlier. Next week we're going to come back and Scott Cook is going to be here Tuesday. He's going to be showing us some penny stock trades. And we'll also be coming back with some more of our expert contributor guest speakers over the coming weeks. So thanks for being here, suppose we can go ahead and just fade to black.